Welcome back everyone. Here's my second video under the topic trial balance. This video will be really useful for those of you who had doubts after going through the first video. Before getting started with the question, let's go through the basics. So this is a recap of what we did before. The basic accounting equation is assets equal capital plus liabilities. What we are doing now is we are going to expand this capital because capital consists of owner's equity and profit. How do you calculate profit? It's income minus expenses. To make work easy, we are going to shift the negative value to the other side of the equation and we will end up with this. Assets plus expenses equal capital plus income plus liabilities. Whenever there is an increase in the left hand side of the equation, it will be debited. But if there is an increase in this side of the equation, capital, income or liabilities, it will be credited. In case of a decrease, it's the exact opposite. So if you remember one side, that's more than enough. We also have to keep the general case in mind. What's the general case? Assets and expenses generally have debit balances. Liabilities, income and capital generally have credit balances. So that part is really important when it comes to trial balance questions. So general case scenarios, we look at this part. This is the question. So we are given with several balances. The first step is to see if it's an asset, capital, liability, income or expense. First find the category. Then take a look at this. Then decide whether it's a debit or a credit. So first we have cash. Cash is a resource and it's under the business's control, which makes it an asset. If we take a look at this, assets generally have a debit balance. So there will be a debit entry of 6,000. Bank. Bank is basically cash at bank. Again, it's an asset because it's a resource and it's under the business's control. So 14,000 will be debited. Accounts receivable. Another name for accounts receivable will be trade receivables, or you can also call them debtors. You have trade receivables or debtors when you sell goods on credit. That is, let's say I'm a toy manufacturer and I sell goods, I sell my toys to toy outlets, toy shops. So when I sell those goods, the toy shops will not pay as and when I supply the goods. They will say that they will pay later. So I will receive my money in the future, which means there will be a future economic inflow. That makes it an asset. So it's debited again. Inventory. Inventory refers to the stocks held in the business for resale. So this is a resource that's under the business's control and it will lead to a future economic inflow because one day you will sell those stocks and you will gain money. The business will gain money. So that's an asset. $10,000. Furniture and equipment, it's an asset again, and it's a resource under the business's control. So is equipment. So they both are assets. Accounts payable, another name will be creditors or trade payables. You have creditors when you buy goods on credit. That means, again taking the toy factory example, I might need plastic in order to manufacture my toys. So I won't pay the plastic supplier as soon as he gives me the goods. I will pay later. So until I pay, there will be an obligation. I owe him. And it will lead to a future economic outflow because I will have to pay money in the future. So it is a liability. Let's take a look at this equation. Liabilities are on the right hand side and they generally have a credit balance. 8,000 will be credited. Sales is one of the main forms of income. Incomes are on the right hand side of the equation, so it's credited. 60,000 will be credited. Then we have purchases. Purchases is an expense when you purchase goods. Expenses are on the left hand side, so they have a debit balance. 35,000 will be debited. Salaries expense. As the name suggests, it's an expense. Same case with utilities, insurance and advertising. They all are expenses. So in one go we can enter all the balances. Now we have owner's capital. This is owner's equity. Owner's contribution to the business. And it's pretty straightforward. It's on the right hand side of the equation, so they generally have a credit balance. 50,000 will be credited. Then we have drawings. Drawings is basically the opposite of capital, which means the owner takes back money or goods from the business, which is basically a decrease in capital. So, taking a look at this, if capital is decreasing, we should look at this part. A decrease in capital will be debited. 5,000 will be debited. If it's still hard to remember, take a look at the first two letters of the word debit. It's DR. And we also write debit using the term DR, right? That's an easy way to remember. Then we have loan. Loan is a liability. Usually, if you take bank loans, that's when you borrow money from the bank and you have to repay the bank in another few years, which means you have an obligation. You have a debt. You have to pay it. And paying that debt in the future will lead to a future economic outflow. So it's a liability. Liabilities have credit balances. 10,000 will be credited. Interest expenses generally occur like this. So when you borrow a loan from the bank, yes, you will have to repay the loan, let's say in 5 years, but annually you might have to pay an interest. So that interest is an expense. Generally, interest is charged as a percentage of the loan. Anyways, 2,000, it's an expense. So expenses are debited. 2,000. Last one, we have rent income. So rent income, as the word suggests, it's an income. That's when usually the business rents out a part of its premises for some other entity. So they will earn an income as rent. So income which is on the right hand side of the equation generally have credit balances. We can sum it up and see if the debit side tallies with the credit side. So if you add them up, debit side total will be 146,000. Same with the credit side. So the debit side tallies with the credit side in this case. With that, we are done with the question.